Melt up is sort of an artificial construct, and I got to admit I've used it as well to describe sometimes what's going on. Melt up is really, I guess, defined by being the opposite of meltdown, and I think we all know what a meltdown is when we see it. And very specifically, about a year ago at this time, we saw a market meltdown where you just saw bids disappear and stock prices just head lower day after day after day with no bids in sight. A melt up is a more gentle phenomenon. It's basically just the market's way of saying that, well, we're going to keep trending higher and there's no real catalyst to come in and sell. So all things being equal, the path of least resistance is to the upside. You've heard me use that term before. And so we just sort of gently go rising. And that is the kind of thing that you can look for into the end of the year without a catalyst, in the absence of a catalyst. Let me be very clear here. It's basically saying that the path of least resistance is higher. The markets have tended to trend higher. We've seen progressive new highs each day on not particularly impressive volume. And as we go into the last 2 weeks of the year, that volume is going to get lighter and lighter, presumably. Remember, next week you have a half day on Tuesday, Christmas Eve. The day following Christmas is a holiday through much of the world, Boxing Day. So that doesn't help volumes. With Christmas being in the middle of the week, you're going to assume that a lot of people are either going to take the beginning of the week or the end of the week off. And as a result, that's going to put a suppression on volume. You do want to keep in mind that if you're doing any year-end tax selling or year-end buying, you may want to keep in mind about the last settlement date of the year being Friday. That may have a little bit of a spike in volume if people want to try to make sure that their trades settle on the 31st rather than next year. And you also expect to see some activity on the final trading day of the year, just year-end position squaring, all kinds of year-end marking and stuff like that going on. But going back to the original question of the melt-up, I think it's a way to describe a market that just sort of generally moves higher, grinding higher. No particular catalyst to the upside, certainly no particular catalyst to the downside. Path of least resistance being higher, and that's the phenomenon that I think, for better or for worse, describes what we've seen over the past 2 weeks. And again, barring the emergence of a catalyst, probably the pattern that's most likely to persist into the end of the year. The flip side being, if there is some sort of negative spontaneous catalyst, volumes can be very light. There's a phrase, there's an old adage that applies very well to markets of this nature, which is don't short a dull tape. And the theory being that if the market's just gently grinding higher, there's really not a lot of value to be gained by shorting in the face of it. So keep that in mind as well. A lot of these old adages have a lot of truth to them. Take that more as general market wisdom, not specific investing advice. But I think that's basically the theme that you would be thinking of as we head into year end.